Yo, that's so weird. I don't know. I wasn't. Can you guys hear me? Oh my gosh, I didn't even push the publish button. I was wondering where everybody was here, just in here chilling in chat. Oh my goodness. Okay, fail Matt. Good morning. We're doing okay. It's a Monday. Here I am talking to myself for about 10-15 minutes. It's okay. Don't even worry about it, Matt said. Yeah, I think I'm like stream hiccups today, so I don't even know. Anyways, what's up, you guys? All right, music rolling here. No clue. Here I'm just sitting here just chit chat, having a good time, talking to myself, and push the go live button, which is the best part. Don't worry though, it all goes uphill from here, hopefully. All right, running into the. What, this was the old. Let me see. Where's the new data? Oh, I need to switch over. EPU24. Oops, let me be close enough. All right, welcome to the stream, everybody. Let's get our green lines up here. All right, 54, 67, 55, 32. We're gonna be doing a prop trading challenge this week. We'll talk about that in a little bit. Show you guys how to get 20 funded accounts. Very cool. Very fun idea. You guys sent me some great ideas, and I'm like, okay, let's do it. How do you get 20 accounts? How do you maintain them? How do you do it? Who do you choose? Blah, blah, blah. Okay, let me get my yellows up in here. Looks like we gapped above the 54.6 on yellow line. Next one we have is 55.93. Clone this line. Just drawing all my lines on here that I need to because we rolled into a new contract. 55.93. Morning, guys. What's up, Chase? What's up? 1 minute till market opens. Looking pretty solid here. 54.69 on the downside. I'm just drawing all my illiquidity pivots here. Clone. Oh god, I need to turn that down. God, that broke my eardrums. Okay, Thinkorswim, let's just mute you because I don't need to hear. God, that was loud. Okay. I don't know if it was loud for you, it was loud for me. Okay, let's just go ahead and mute. Let's go here. Output of Thinkorswim. Let's turn that to like 10%. Ooh, that's scary. That was like a jump scare for me. All right, let's get ready to get going. Market's opening pretty clean in between DD bands. Nothing crazy going on here. Did you have a good Father's Day? Y'all have a good time today? Good time or good time yesterday, I mean. Measure the halfway point between the two. We always know halfway points are a slight magical number here. In the two contracts, we rolled into. I'm just gonna draw on the screen. Trying to get along, maybe. Y'all have a good day. Y'all have a good weekend. Before 67, 66. Okay. It's outside of DD band, so. That's actually the lower DD band already. Okay. So the halfway point between the two contracts is actually bottom DD band. So it's interesting to see that. Draw like a little line here, make a dash so you guys can easily see that. Okay, these dash lines are always like important here. Okay. All right, we got mean reversion opening in here. Looks like I do get 55.41, which is about 10 points lower support if I drop on S&P. Nasdaq's already trying to move right out the door. Resilience is not positive. It's kind of right on the edge on both of these. Nice Father's Day is all I can ask for. That's right. That's right. Those of you with kiddos, you know how it goes. That's it for me. QQQ Bull Zone. QQ here. Perfect. Let it fall by the dip. This could be a good day. Yeah, but that UVXY, VIX opening, kind of where it is. Okay. VIX is still trading above this key level that we look at here too, right? So this guy right here, volatility is going to be present. You're going to overshoot pivots. It's not going to be the easiest market to trade in. So VIX being above hedge pressure and breaking is not really the best sign in the world. This is the first red light we have. So keep an eye out today at this key VIX level. VIX futures, right? We're close to about 13, like kind of like 13 on the dot. So we're going to have some volatility today, unfortunately. Not going to be like a clean bull run up to the upside. I'll let it pull back. I don't really want to short this either. These resilience numbers are like right on the edge. Put the Nasdaq one down here. Cool. All right. Starting to come through. When these numbers are greater than 0, usually look for the market to move through this box right here. So what I want to see, very bullish market, 100% agree that it's bullish. Let's not catch the fake out. Let's let the market try to sell, and let me jump right on the bull wave when I get it. Res number negative, S&P number slightly positive. So S&P trying to make its way to fill a gap. Nasdaq trying to make its way down to bull zone. We'll check SPY. SPY have. Let's look at our gaps on SPY. Get that dip. Volatility is not going to be our best friend this week. What's up, F2? How does that affect rollover when it comes to the resilience numbers? Nothing. The resilience numbers are based on the index itself. It's not the contract. The index and the stocks. So rollover won't affect resilience at all because it's looking at just SPY itself. Yeah, good question. DD band, you have to adjust your methodology. So like this is a day I rolled. My reference point has to be you for the starting point of the calc. Friends, don't forget to sub to the stream. It's your first time here. We love having you. Come watch me trade every morning using the Rocket Scooter trading platform. I'm gonna start a new thing where I show you guys how to do a 20 funded account thing. Now I went and looked. Usually, I'm shopping around still. So thing is, I'm gonna have it done today. I'm just gonna think out who I'm gonna use. Usually Apex has like a 50 or 90% off or something coupon, and you can get these things for like 15 bucks a piece. But that, I don't think that promotion is going on right now. I looked this morning, and they're like 50 bucks a piece. So I'm like, you know, Like, So I want them to be like super cheap to do the challenge. That's kind of the whole point of that. So I'm gonna try to figure out something I can do. I'm gonna call around and see if I can't get any special deals elsewhere. The 90% of it, I just missed it. I do 80 pretty often. So what I'm gonna do is, even if I don't do 20, I might just do like 5 or 10. Something, because like I feel like it's kind of a waste to buy a lot of them when they're not on sale. The whole point is you wait till they're on sale. Yeah, I didn't expect it to just end. So I'm gonna call around and see what I can do. I know a lot of people, a lot of places. So let me see if they'll hook me up. What I'll do is I'll do something. Even if it's not the full 20, I'll do something. But I would like to get the full 20. I just don't want to pay $1,000 for it. The trick is to get as much as you can, the value out of it, and to make a video out of how to do it. All right. Yeah, 5 is the same as 20. The same as risk management. And that's true. That's true. I could just scale it down. I'd rather do 10 instead of 5 though. What I'll just do is like 10. Yeah, but they're like 90% off. You could get them for like almost only like $15 a piece, it look like. All right, S&P, let's get you coming down, baby. Down to here. Half gap resistance with negative res is what I'm looking at. Trying to become positive, so be careful on this one. There's really no actionability here. The market is generally bullish. Let's just keep looking at all of that. So while we're waiting, let's take a look at the monthly map. So first and foremost, let's look at our market's going up for sure. I feel like in general. SPY was a little jumbled and it's still jumbled. So no good. There's a pencil. Yeah, this is super jumbled up. It's not really that good. There's not a lot that I like about this. So SPY kind of like up, down, up. There's really nothing to it. It doesn't have a lot of kind of in the next all the way through July. It's choppy. There's no volatility, but it's choppy. And then after that, the bull market gets really nice and stable. So the bull zone, bear zone are all chopping around. The S&P is really kind of like not consistently bullish or bearish according to the options. It's just kind of like non-volatile. So anything can happen, I would say. Let's look at Qs really quick. Yeah, see, same thing. Not really super bullish, not really super bearish. And like the short term. And the longer term bullish, right? So you want to see the monthly maps bottom of bull zones trending a certain way. It is kind of slightly up, slightly down and fanning out. Bear zone kind of like this too. So this is leading up until the beginning of July. So if you're looking at the forecast here, there's really not a lot to say. Normally, it's a really nice solid trend, right? So the market's pressing all-time highs, and you can just see that it's cautiously sitting there. Nasdaq also has a little bit more volatility, which is like the space between these. So inconsistently pushing higher-ish with little pockets of volatility and like limited burst potential, I'd say, to the upside. I think our chat last time was talking about this. A lot of people are like saying the market's just cautiously going to move higher. People distrust, what they see in the market, all-time highs. This is not a bear market. It's not a sell-off market. It's not a fade market by any means. There's no bad financial news to shock this thing down. Financial news is good. There's nothing bad in the economic data. Jobs data is looking good. The FOMC is not going to raise rates for many, many, many years. The votes distributed amongst the members are all that they're going to hold or cut. So no rate hikes, no credit bubbles popping, no bubbles anywhere. Stock market's just gracefully tapping all-time highs and chilling. Inflation's coming down on its own. It's stable. It's not getting so much better, but it's not falling. Or it's not raising. Jobs data is getting better. So like in general, everything looks good. It's like what they called the soft landing a long time ago. There's no bad economic data. There's nothing that's really going to pop this. And a lot of people get scared of markets when it goes to all-time highs. When it goes to all-time highs, it's really hard to wrap your head around this. I think it took me about like half a decade to figure this out. Is that when markets are moving higher, the first sign of a trader being new is that they feel uncomfortable with it. Okay, maybe it's wrong. Maybe it's double top. Maybe I should fade this and trade this lower. And as I got older, that discomfort I felt with that, like I don't want to long at the top, right? Made me like start to realize that most of the time when you long at the top, that's actually not the top. It's usually the bottom of a bigger rally. And as markets become bullish and like stay bullish, right? That discomfort goes away. And I no longer feel uncomfortable longing at a top. Like even right now, I feel like this is the bottom of a really big rally. Maybe not today, but this area, like I'm gonna tell you the levels that we're at right now. I would say maybe 380, 420 is probably like the new low of our lifetime. Even the next stock market crash, when we crash from 8,000 S&P or whatever, 10,000 S&P, it'll fall to maybe like the 4,000 or 5,000 range. We're not going to see the numbers like we've seen before. So this is the start of the seeding point for the market to move, because like the economy has just kind of like stalled out in a positive direction, just inching forward. So it can only really go up from here. And once it starts going up and there's no bad data, I mean, you just got so much short position to unwind, and it's really healthy economy. So like, I'm not necessarily going to try to bet that this market turns around, because in my years of trading, you need a catalyst. You need events to bring it down, and all the events are turning out to be pretty decent. So somebody said Top Step had a $19 a month deal not too long ago if you use their Top Step X platform. I'll give me that promo again, or at least for you and followers. Okay, I'll ask around. The overnights are lining up. Oh yeah, let's put this on the chart real quick. $68.98. All right. F.US.ESU24. Okay. Let's remove M. Oh, EP. Oops. That's more like it. All right. Wait a minute. There they are. Okay, there's my drawings. 54.68, 54.98. Good call. Is that upper? We're all down here. The monthly is 54.83. Both VIX, I opened above Petrus for me. That's bearish. Slightly, yeah. It could cost, like, there's gonna be some volatility. So, like, I'm not trading this for a blast of potential from here. Today, I'm still feeling it's likely gonna try to fade. So, resiliences are starting to fail a little bit, not really pushing higher. I think up here at the top, S&P is gonna try to drop, but higher before lower. So, I think what I am expecting today is maybe a push, and then it's gonna try to make its way here, and then this is kind of the questionable point. The film crew check gold. Okay, let's look it up. me catch that to a little bit to the downside there. Gold is just kind of falling off of 215s. When two edge pressures are lining up like that and its resistance, it's usually very strong. So gold, wow. No floor underneath that. So yeah, gold's looking like it's kind of melting down a little bit today. So shorting off of here with stops above that is pretty decent. That if I was trading that. Good call, good call. Okay. Fridays, 2 p.m. live videos privated. Oh, it is? Okay, I'll check on that. No shenanigans there. I usually will private the video if troll comes in the chat and starts bombing chat with nonsense. And that's what happened on Friday. And it derails and just kind of just gets all blah. Actually had a really good trading day Friday. But yeah. I don't let people advertise their nonsense on my stream. Normally I can delete it like while they say it, but I didn't do it that time. Just gotta remove all attempts of them to use our name to advertise. There's that downside push to hedge. I didn't short this, but in my brain, it's like I'm waiting for it to come down. So I want it to be right down here. You guys, don't forget, sub to the stream if you haven't been here before. It's your first time. Call me some tickers out. I'll run them on here and show you how to look at liquidity maps for them. Pretty fun technique. Yeah, trust me, I don't hide streams because like trades are bad. Trades are actually really good that day. I think I was at like what, 4 or 5 grand, right? Something big. But okay. S&P going to my lower targets here. That lower, and this is also the halfway point between the two contracts, just FYI, this dashed line here. So a lot of pivots are lining up down here. One of the things that makes me a little nervous is that this might be short-lived because of the volatility. I might want to just retrace maybe half of that, maybe just get a little scalp. But this is like the big support today. So I'm going to wait for that one too as well. Like 4 things are lining up right here. Scalp. Okay. Don't forget to hit that like button down the bottom of the stream. Subscribe to the channel if you haven't, or check out the Rock Scooter platform. Oy, let me adjust myself here. We're running a small extended trial on the platform. You guys can check out these indicators. Liquidity maps, look at options. And find pockets of liquidity and order flow. Predictable order flow. Let's look for breakouts today. Anything? mRNA, BW, BBWI. Okay, what about breakups? There's a handful of those. AMC. Oh, AMC today. Let's check that out. Shit, AMC's triggering the atom smash. The atom bomb. This is a big breakout potential for AMC. 3% already. Interesting. It says today AMC's in running mode. How's GameStop doing? Way I went back up to the high 20s. Keith Gill decided to exercise. Cash out some of his options. I didn't read all the data, but I looked at the numbers. It looks like he cashed out some of the options. I don't know how much money was in his brokerage account, but I don't think he'd afford to buy all those shares unless he sold some of the options for cash. So he exercised some. Took all the profits and made himself like the third largest GameStop share owner. Why? Why? It's like buying. It's like becoming the top shareholder in Pogs. Like slap bracelets, like some fad. Like it's why be the last shareholder of Beanie Babies? Don't do it. Don't do it. Keith, bro, come on. Boy, need to. Like, unless he wants to get on the board of GameStop and elect himself the CEO now, just the ultimate troll. Maybe he's just having fun with this, and that'd be fine. But geez, man, guy make himself the CEO of GameStop, and then all of a sudden they sell headbands or something. They sell something different. Just really come across your platform, currently working on your strat. Awesome, dude. If you have any questions about like any of the techniques, just let me know. Most of what we teach here is patience and risk management, like waiting for the setup I want. Take like longs or shorts off of it. You have ESM open to trade with Tradeovate instead of ES. I can't. What is Tom? What does that mean? Do you ever look at the monthly map for VIX? Yeah. Usually, we don't do it a lot, but the reason why we don't do it is because typically VIX monthly maps are always showing downward movement. Volatility is almost always in collapse. So it's going to be rare unless it's like a definitive bear market that the volatility, the bull side is just not in perpetual collapse. Bear side choking towards it like this, it just means the volatility itself is becoming less volatile. The idea that it's actually a good time to look at it. VIX is above that triple B level. VIX is up here. VVIX is how much volatility the VIX itself has. So if that volatility of the volatility is getting smaller, then the V's are getting smaller, which means the volatility is less likely to blast up than it is to decay, kind of stabilize, and then continue to fall. So the fact that it's not getting worse is a good sign that this kind of volatile environment's really short-lived. Right? You want to see that volatility show signs of itself kind of like running away, right? Oh, March contract. Oh, I need to roll over. Yeah. Thanks, bud. You guys are so awesome. Let me roll it. My man. Hold on, let me try this out. I don't know how this works. As long as I've done this. ES and QU4. Oh, there it is. Okay, you just hit the plus sign. I was like, what am I doing over here? Let's just remove the old ones. Perfect. What'd you miss? A bunch of awesomeness, like literally. We've done so much. We've already made $1 billion, lost $1 trillion. I mean, it's been a crazy morning. A lot of casino with their gains. Okay. Looks like I think we're going to be dropping to 54.69 today on the S&P. I think that today we make our way down here. So I'm a little concerned. There it is. Both these resilience numbers are negative, so the market's just not going to have a most pleasant time today to the upside. So what I think is from here, it's going to try to move up, and then it's questionable what happens if we break here to there. So the steps are, I'll draw how this works. If we break here, then it's to there. So for now, I think that the market's going to kind of mosey on down to this 83 level. I actually might take a stab at it. My 2 pivots. When you started, you didn't even know what rollover meant. Dude, that's one thing that like I think these futures prop firms really need to get with is like actually educate people on futures in general, because there's a lot that you don't learn. You have to kind of like learn on the fly. It's a little easy to get confused there because there's like a lot of details that don't get taught. Unless you go study for a series 3, there's really no education on futures, right? Where you follow some YouTuber that'll teach you the stuff. But in general, most people that trade futures, you're just kind of like, lost, thrown to the wolves, and they don't know what to do, right? You don't know like a lot of the things. It took me many years to figure it out too. You know, like what is it that's like really useful, you know? Like learning about contango and backwardation. There's all these like things that go in futures that they're not really like the most fun things in the world to learn. Unless you're like a math addict like me, then that's fun, I guess. Did you guys do anything fun for Father's Day? Anybody? Dude, I had like event after event after event. Saw my mom. Took little man to see dad. Then went to girlfriends' families who had like dad's Father's Day, brother's birthday, nephew's birthday. It was like everyone's birthday and everyone's Father's Day all at once. Tons of celebrations. Like everybody got to blow out a candle yesterday. There was like so many people. Cooked for everyone. Oh, it was like a start to finish event. It's fun. And it was crazy because started teaching Gabriel how to play chess last year. Well, actually not last year, like maybe like 4 or 5 months ago. And he was 5 at the time, and he's now 6, and he's like playing very well. Like literally, it's hard to beat him. And like this time was a lot harder than it normally is. I started playing him, teaching him the moves. It was like, okay. He was just kind of, you know, moving the pieces around, but now he's strategizing. Like, it was crazy because like yesterday I put a full press on him. I ran because I'm teaching him strategies too. And I let him open at white, and I ran a Sicilian defense, which is a really weird defense for people to go offensive against. He's actually playing defensively, and I really got a hand on the board. But it's funny watching a 6-year-old wrap their head around like defensive maneuvers. Like every move he made was like correct to defend against what I did when I got the control of the game. So I'm like, all right, by the time this kid is like 6.5, he's gonna be like whooping my ass. I should stop. I should count my blessings now. But it's fun to watch him develop into something he's like actually really good at. And I'm just like okay at chess, I would say. I'm not like, but I think he's special in that regards because he's really smart. Plus, if you guys play chess, Sicilian's a little kind of fucking weird. Anyways, it's not the best black defense to play, but it's widely used because it's very versatile. But then I'm like, oh, and he's also 6. I'm like, these are things. But it was kind of cool to watch a players. Like I've played people my age who don't strategize as much as this 6-year-old does. So I was kind of like, okay. And you could tell he was very like, it was adorable because he was very like, he's like very intense about it. And when he lost, because I don't normally just like when I first started playing, I used to play and like let him win. But now we're playing to teach him the game, right? And when he lost, he just broke down and started crying. It was that intense for him. And I was like, it's okay, you know, losing's part of the game. But he was very like emotional. It sounded like he's investing a lot mentally into things like being competitive. It's a lot like me though, in the same way. Took your son to a drive-in theater. Oh, that's awesome. You get a bunch of cinnamon rolls to your family, dude. That's dope. Hey, cinnamon rolls are good. It's a great way to do it. He was like, he broke down, he's crying, he wanted a hug. I was like, it's okay, you know, losing's part of the game, you know. I said, you're also playing your dad, he's really good. You're gonna play people that are better than you. You want to learn from them, and you don't want to. That's trading too, right? You find somebody that's really good at trading, you want to learn from them. You find somebody that's really good at what they do. Somebody that's really good at trading and you're not. Let's just Think about it. They're taking your money and putting it in their pocket. They're the ones that are winning. And if you're losing, you know, you lost to them, and this is what you should learn from them. Like, learn a little bit. Sounds like that kid who was a genius at chess and Russian TV announces that he's going to have to fight with the Russian grandmaster. Yeah, I'm still gauging because he's still really young and he likes the game, but I'm curious if he's going to pick it up and be like on a path to be grandmaster, or at least like high ranked, if that's something. I feel like right now, honestly, I'm sure he's skillful enough to play people and win of any. I bet you he could beat at least like most people his age, for sure. You still crying trading. I know the feeling, man. All right, resilience negative, Nasdaq negative. We're pushing the top part of the box. Is like, this is the part. Do I decide, do I want to take a little quickie NQ short? Do I like it? Are we scalping back down? What do we think, guys? Let's try it. Just back down to my lower levels. I let it bounce around a little bit. I think that this is very potential positive. That this is probably what we do. These negative resilience numbers, it's just not going to like being up in here. I think we're down today. I don't play competitively, so I wouldn't know what my rating is if I were to play. I actually was talking to Son's mom yesterday about, because like we don't let him play video games yet, but I was like, I think now's the time that we get him a tablet and let him play like on chess. Just like wipe everything from the tablet, but like let him log in and play chess online with people to learn competition and like learn how to get smoked by others and be okay with it and then get better and compete, like healthy compete. So that's like one of the things that I might actually do and start playing with them. So I'll know what my rating is if I do that. I'm pretty sure I'd be in the high teens if I was playing. Not like grandmaster level by any means, but what about the video? If you're not allowed, just wanted to show what I meant. Wait, what? Oh, okay. Including map peeps going back and forth between the two. What does that tell you? Oh, so what it does is it's just showing you that inside of... Okay, let me show you how that works. That inside of here, the pressure is there. Down here, the pressure is somewhere else. So let me show you what it does. If you click this liquidity map, it'll bring up the little... Oh, let me... Give me a bigger version of that. It's basically not... It's telling you that the pressure in the middle is in the middle. So between here and here, the pressure is pointing to the middle. Down here, the pressure is pointing to there. Is what it's telling you. Yeah, no problem. Throwing the controller and losing more in combat is one thing. Throwing a tablet is another. Yeah, that's the one thing. That's the one thing. Luckily he doesn't throw tantrums when he loses. UQQ map a lot more attractive this morning. Spy was kind of blah. I know, right? They're all kind of blah, and I think we needed a little bit of downside today just to get this to reset. These resilience numbers are pretty garbo. They're pretty booty today. This is what I want to be on now. I want to play this range here. I think in futures, the S&P just pulls back to here. Okay, let me text a friend of mine really quick. Let me check out my account there. What's your guys' blitz rating? You play chess? Alright. $1,300. Oh, dope. I've never officially done anything to give myself a score, like played competitive matches. But I do play other people, like friends of mine who are like 1,500 to 2,000. Like I have some friends that are like really competitive. One of my friends is a chess streamer. I've played them before. And I'm like, okay, while they do smoke me pretty good, it's not that bad. I'm like, okay, so I probably always guess that I'd probably be like closer to 1,500 maybe. But I don't play enough to be good, be like super good. Maybe 13 to 1,500 sounds about right for me too. I'd probably be with you guys. We should all play. That'd be fun. Let's be extra nerds, not just like nerds about the stock market. Do chess nerds together. I'm sure you guys whip my ass. I don't play enough. I'm starting to play more again because I'm training Gabo. So, damn Lee, up to 1,600, pretty good. NASDAQ, negative RAS, negative RAS. Volatility is high. I'm still feeling comfortable. Normally in like serious mode, I wouldn't be scalping it like this. I'm just doing something to kind of keep the ball moving. I normally would wait for this move to kind of play out to the downside first, and then take a long. I wouldn't normally do this. Like when I launched that competition finally, or that contest, why did I say contest? That challenge, I wouldn't be doing this trade, by the way. It's a riskier trade. It's trading in volatility. It's going to require a little bit of drawdown. So it is betting on the bigger volatility, and there's no resistance target on NASDAQ for me to find that I can short against. That's the problem. I do believe the market does go up from here. I am definitely not a bear. Just kind of keep that in mind. This is a technical scalp on resilience, just not being positive. So this is my normal trading. You guys are used to seeing me trade like lately, like Robin's Cup and things like that, where I'm just kind of throwing like one contract or a couple micros or something, like basically inching along, or a small count challenge. This is just me trading. So this is pretty normal sizes for me, is like between like 1 and 10. It's like pretty normal. 10 would be like I would basically go all in on a trade. Like this is like, okay, I'm very confident, right? 5 is my normal average, medium confidence, average trade. That's pretty normal. 3 to 5. I'll do like a 2 entry and a 3 entry to kind of like add a position, make it 5. Give or take. Yeah. IWM, like I said, it's just not, definitely not bearish at all. At all. But a little downside scalp, I think, is definitely acceptable for today. Let's just mark our charts here as well. Let me show you a track. You guys, first time to the stream, by the way. give me a sub if you don't mind. You'll learn a whole lot here, trust me, when I say as far as trading goes. Actually learn stuff, not just have fun and chill and trade, but you actually learn stuff here too. We'll teach you things about futures you never knew before. Risk management, we'll teach you all that stuff. I think the stream kind of chill too. I'll argue that I am the second best looking guy named Matt that streams. Like, damn it, trades my Matt. That's a guarantee though. Maybe Trade Brigade Matt is sexier, who knows? Maybe I'll be third. There's a ton of Matts that should actually stream. It's like the most common streamer name, I think. All right. This is just usually when you have two contracts, you always do contango midpoint, just like the difference between two contract and rollover divided by 2. This is always a target. Any downside of this contract, there's going to be high volume here. It's just a thing. Trust me on that being a thing. Doesn't mean it has to go there today, but it means that when you go there, you're going to see volume, a big flurry of volume there. So any shorts that I have at potential is I look for like trades like this. Negative resilience. Try to fade a little bit of this. It's not a gap up. It's just contango, right? But that midpoints are very important. We learn in that class we teach on triple B, right? Farkas, the only going up because I bought the downside. Like volatility comes in, you bank in like 30 seconds. Yeah, you really do. I think it would go as high as 55.08, one strike above, probably. IWM starting to take a little bit of heat here. If you guys haven't checked out the platform yet, so we're rolling into our marketplace very soon, very soon. Our team has just been overloaded with a lot of patches and things. We've been pumping out for it. We told you guys this week we were gonna get your accounts set up in there. Still running into issues trying to get everybody migrated. So that's kind of the thing where we are doing now. You guys will all be up in the marketplace fairly soon. So letting them do what they need to do to get that rolling out. And as soon as you guys are there, things are going to be changing for the show. Things are going to be changing for like everything here. It's going to be super exciting. The bartending trader, he's either going to wait for a sale or get a direct deal from the company by less than 20. Wait a minute. Oh, what happened to 20 funded accounts? Oh, yeah. So I checked the price and they don't have that 90% off sale anymore, bartending. Usually they have that when I talked about it last week, I thought it was active, and then I went ahead and looked. I looked over the weekend, then I looked here again this morning, and it looks like the sale is gone. So the accounts that are normally like $17 or whatever, they're now like 50 bucks. So I'm actually calling friends of mine who run prop firms to see if they can cut me a deal. See if they can give me a special deal on the monthlies, just to run a challenge. So I can't pull in some connections. I mean, I don't mind like not supporting my friends' companies as well. Just ask them if they have any special sales going on. Like, I don't want free accounts or anything. That's not my style. I definitely want to pay for it, take it seriously, just like everyone else. I'm like, do you guys have any good deals going on? Yeah. So if I can't get like a decent deal, so part of the trick is when they run the sale, you get the accounts and then you save them at that sale price, and then you basically utilize that as like maximum return for minimum effort, minimum cost. That's the whole point. And the idea is that the timing of that doesn't line up with the timing of when I want to do it. Come on, in queue. All right. Last squeeze out candle. That's the last one that I feel comfortable with. Right here at the top. SPY S&P closing in its gap overnight. Shorting without an upside target to short off of is always very risky because especially when like something like NASDAQ, when there's nothing up here, I'm just proxy shorting up the S&P. I shorted here, and then I shorted here, like throughout here. Here and here. I don't want to add to it again, but basically I'm proxying off the S&P's resistance. Funded futures trading would probably get you a deal. They are newish. I think they actually do live funded accounts. Okay. Shauna, what's up? Are we looking at trying to understand things? Do you need live data for equities? You should get the live data. It's definitely what you have to get everything to like publish correctly. So whenever you sign up for the platform, make sure when it says select live data, you choose to select live data. Other than that, in the connections tab, you'll have the ability to get your live data here. So that deal on the Rocket Scooter platform? Oh, awesome. Awesome. Yeah, when all said and done with marketplace stuff comes out, the platform itself is going to have the ability for other people to build inside of it. So other indicators, other creators. We have some of the best and brightest, in my opinion, communities, rooms, just awesome people building stuff. And we have a sandbox for them to do it in. So the Rocket Scooter platform won't just be synonymous with my stuff. It'll basically be the sandbox. You can like count it as like me being the first creator in Rocket Scooter. All these tools I built, you're buying all these tools for this platform, just like you can on TradingView. The exception is that we're going to have a lot more things that people can make than you can on TradingView. So when our language is fully released in all its components, you'll be people can write alerts, call outs, strategies, scanner settings, and things like that. And so you can get your favorite trader scanner settings, and you can just basically buy or share, buy or sell anything, share anything for free if you want. You and your friends can make stuff and share it. Do I feel like it's a good time to enter the short? I feel like it's a terrible time to enter the short. And the only reason I'm doing it is because I am betting on the market trying to sell because resilience is not strong enough to show any upside movement, and there's volatility. And I think this is a very risky thing for me to be doing. And of course, I can't give you investment advice either. Oops. But I'm proxy short. I'm betting that the S&P resists this target, which will pull everything else down. And I'm using NASDAQ because NASDAQ has moved higher than the S&P. So when S&P bounces off of these targets, I'm going to clear my NASDAQ trade out. You're getting it now, Rashana? Okay, cool. Let me know if you have any questions. But all signs, like the economy itself is like very not bearish, by the way. I'm not a bear in this market whatsoever. Like whatsoever. I'm using resilience right now to try to scout to the bottom of the box. Everybody here knows my trades in resilience. This number right here, one of our best indicators. Irrational market, so it's kind of like flip-flopping. It went positive here, so I got a little nervous. But But this res number being negative is what's making me want to take the trade I'm in. When this number is negative, let me show you on the cheat sheet what it does. And the cheat sheets are available on the website or on the Discord for those of you who signed up. It's only 35 bucks for a month if you want to check out everything. It's like even the platform comes with that. And then it's like a lot of people charge 200 bucks and 500 bucks for like a trade room. Weird. For Discord. We think that it's better to have a bigger, more variety in our community than be like very exclusive like that and charging a lot of money for Discord. Ours, you get a platform, all these tools that go with it. There's videos, there's education, there's all kind of stuff, and it's very inexpensive for that. So in the cheat sheets here in the Discord here, there's a lot of tools. So what I'm looking for, and again, like I said, this is like a 50-50 shot, and it's going to be volatile, and it's going to shake me out a little bit. Like I'm taking some draw now right now, but I think the risk is worth it. It's just not the most straightforward trade. That is one that we're looking for. Let's pop this up. This guy right here. And this guy. No, this one. Okay. Let me show all these little cartoon drawings mean. Here. 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 So my girlfriend's a Twitch streamer, by the way. Interesting dynamic. We've been talking about co-streaming together just on Twitch to have some fun, like doing gaming or something at night. She's not just a Twitch streamer. She's like she's a doctor and she's a Twitch streamer. And so we might just have a variety thing in the evenings just for fun, where we just co-stream playing like Overcooked and throwing controllers at each other and shit. Having fun. But I wanted to start streaming on trading on Twitch as well. So I might start building a Twitch empire. There's not a lot of traders over there. Some stock market shows, but not like a trader thing. Is she an eye doctor? Yeah. Do you know her, Sam? How'd you guess? From the last stream? Yeah. That's correct. Okay, so let's go over these really quick. Anyways, I might start streaming trading on Twitch, so we're gonna be doing that probably this week too. Resilience, right? Redistribution zone is this white box, and right here it's like literally right here. Okay. This white box, whenever this number is negative, I like to take that. Where's my pencil tool? Where'd you go? Oh, there it is. Okay. When this box is negative, I look for, or the number is negative, which it is. I look for the market to press the bottom side of the box. And when you're floating above it, I look for it to zap back down, which is what it's doing right now. The bottom of the box is right here. You see how it went above it and I'm trading it right back down. I don't like that it overshot as much as it did, but hey, look at my trade. There we go. That's it. This is literally the trade I was trying to scalp. Now I overshot way too much. You know, and that's why these kind of shorts are risky. The actual profit target is to go to this little spot right here. Does everybody see how that trade is exactly lined up, exactly how the graphic shows? Study this on the screen really quick. Everyone see this? See that? I mean, it looks exactly the same. Let me make it bigger so it's easier to follow. Now, the reason I say it's a risky trade because it's like, how much drawdown am I going to take before it finally takes off? As you see here, it just means that I'm not longing up here. Like it's up here, up here, up here, up here, then likely to zap back down. Give me, anyone in chat, like a big fat yes. Type it if you understand. Yes, you see what I'm saying? This is what the cheat sheet shows me. The setup I used to take, right? And especially your new folks here. You like that? You like that? Yeah, baby. You get this? Make it a little easier to see. Okay. Res less than 0. Res less than 0. It's floating above the box as I don't take the long there. I try to fade it to the box. The problem is that I was proxy trading S&P to do the same thing through NASDAQ because it had moved farther. Right? So it means like I'm letting S&P pivot and I'm trading the NASDAQ with it. The NASDAQ typically overshoots much faster than the S&P and I have to take a lot more drawdown for that, which I don't like. Don't like at all. Here's a trade. And that's why people like, do you think it's a good idea to short? And I go, I'm short, but I don't think it's a good idea. I think it's very risky because I don't know how much drawdown I'm going to take before a trade like this plays out. I like to take that gap fill trade right here. In the S&P, I'm looking for it to fulfill what I wanted it to fulfill earlier as well, which is to touch this little place right here. Right when the S&P hits that, right when S&P does the same thing, S&P in a similar boat, at the box or top of the box, pushes down and closes out. And I'll take this, right? There's like a quickie little 2-3 grand. Come on, NASDAQ. Push. Push, baby. One more. One more. Come on. Me taking a little profit here. Close out 2. Hold the other 3 as a runner. Let the rest ride for the day. Easy as that. Look at that. Close out 2. Let's see what we get. All right. And I closed, like I got the big run. I closed out small part of it. Still holding on to the bigger part of it. Yeah, I did that proxy trade. S&P here to here. I took out some profit. Just going to hang on to the rest. And that's it. Yeah, you guys, if you sub to the channel, it's free. We do this every day. Twice a day. We do this also stream in the afternoon at 2 o'clock. So you recognize like in the afternoons, nobody's really ever streaming. And a lot of people are like at lunch or just chilling. And there's really nobody streaming at that 2 o'clock time slot. So we're like, let's take over the afternoons. Let's be like the futures presence in the afternoon. Let's make a splash. You guys come out 2 o'clock. We do a lot of education and stuff there. All right. Golden Squallet, baby. Amazing trade, hard deal to draw down. Yeah, well, that's like why trades like that aren't that great. Because you have to know how much you're going to... I mean, I knew how much I was going to lose if I was wrong and where I was going to cut. But you don't know exactly how much money you're going to be down because the S&P and NASDAQ don't just trade at the same rate. The S&P is going up and NASDAQ's going up. NASDAQ tends to go up much faster, and it's really hard to gauge how much that is. So the S&P, like my idea was that the S&P was down here with negative resilience. I shorted there and shorted there again on my NASDAQ. And then right here is when I was holding my breath. If S&P broke through here and kept going, I probably would have closed everything out. And how much drawdown would have been kind of like holding my breath, right? S&P is trying to support here. Trying to support. These are new techniques that I don't normally do a lot. I don't normally trade NASDAQ. So I'm trying something new. New for myself. And I'm trading NASDAQ up S&P's pivots. So S&P is trying to hold this area because its own resilience is positive, while NASDAQ's is negative. So you can see the push and pull between the two. Interesting how it's doing the same thing again. I wouldn't say it's going against me. It's still the same trade that's playing out. I usually trade to take the loss I wanted to take to get the gain I wanted to make. I don't usually try to break even and get out of the way unless it's like there's some stakes on it, like I'm trading a challenge or something. And I'm confident the trade's gone against me. Being upside down is not confident the trade's gone against me. It just means my entry is a lot lower than where I want it to be. The trade goes against me when the price is at a certain level. So I'll consider the trade going against me here. If we start supporting here, I'm out on the S&P. NASDAQ has like no resistances or supports up there. So it's kind of like I'm tethering off of S&P's trade. So now I'm practically even-ish on the trade. Well, there's a lot of volatility, and that's to be expected. Because another thing that we teach you guys is that when VIX is in this mode here, we teach a trick called this triple B right here. Let's call this like a VIX thing. Like when you're trading up here, there's just a lot of extra volatility. That's why it's doing what it's doing. It's this is what volatility actually is. The fact that it caught itself really quick. Interesting. But now my cost base is much higher. So the interesting thing is like I'm breaking, like my break even is here. Earlier it was here. So all I did right now with that little swoop in, get some profit, get back in, or not get back in, but we'll get back in eventually, is to get a cost basis that's closer to here. Now my cost basis has moved from there to there, which is kind of where I'd rather be, closer to the top of the box. Yeah, that's basically it, Wilbur. Like, and what I do is like the amount of contracts I'm in, make sure that the possible loss I take is acceptable to the amount I want to lose. Great question. So like the trade is against me. Now, typically you want the trade to be against you on a profit standpoint. You don't want to lose so much money. But the way that I handle that is I just throttle the size of the position I'm in so that I know when the trade hits the price that I don't want to be in, when it's logically going against me, that I know pretty much about how much I've lost. Like estimating if the S&P goes up like another, I don't know, 4 points. NASDAQ goes up another 20. I'll only be down $1,500. So I let the price is where I consider getting out. And I always just know if I have a lot of room for it to move, then my position's smaller. If there's not a lot of room, my position's bigger. Yeah. Different way of thinking. Yeah, it is. But it's like utilizing the actual instrument itself as my point of no return. Like I know I'm wrong because the instrument's doing something. Not wrong because I'm losing so much money. If I'm losing so much money and I'm wrong, it's because my position was too big or that my entry was in a bad spot. So there's improvements I can make there, but the other side of the coin I can't improve on. Market's going to do what the market's going to do. So the hard stop is where the market is. And funny thing is that the volatility is just playing again. I'm glad I cut out a little bit when I did. Clearly, when you fill the gap, that's the only scalp I look for. And I'm not holding for this to reverse any lower, but I am not liking it as much as I did earlier. This number going positive is not what I want to see for the scalp that I'm in. And it's probably going to squeeze me on this one. This no copyright playlist has a lot of like dubsteppy stuff. I need some like light, chill EDM vibes in the morning. Yeah, if I can't get a good deal on these prop accounts, what I'm going to do is I'll just do 5 with Apex, or maybe 10. And simulate the same experience with that. Because they don't have a sale going on right now. The idea is to lock in 20 at like a low price, and you get that monthly recurring, but you don't use all 20. You use a smaller portion at like 5. You want to get 5 funded accounts at least out of the 20. And then once you have 5 funded accounts, you really only need to trade off of 1, maybe 2. But you keep the other ones on reserve at that really low rate just so that you never stop trading. The trick with trader funding programs, you never stop trading. The trick that they get you is that they have you trading 20 accounts at once and you trade them all like they're one account. It's like the biggest like wool over the eyes of the trader. It's like this, right? Let me teach you guys how everyone's been deceived and duped by this whole prop firm industry. And it's for good reasons, because you'll pay for it. It's like, why an example is, if you're going to charge $100 a month for, I'm going to make up a number, for 150,000 account. Mind you, this is fake. This is play money. This is paper. They're giving you a fake chunk of money. This could be 1.5 billion for all you care. It's fake. They're just handing you hot air and charging you for it. And for some reason, they've convinced you to buy it 20 times. So here's a made up amount of money, and buy this fake amount of money for buy 20 of them. We sell you 20. Doesn't matter. It's all the same. It's fugazi, wugazi. It's thin air. So point I'm saying is that traders are like, ooh, I can multiply this by 20. You could also multiply your trade by 20 at a 20th of the price. Like, you'll need 20 accounts to multiply your gains by 20. Why trade one contract in a small account and pay 20 of those, and trade 20 contracts in one account and pay once and pay less? And so the idea is that the whole 20 account thing is just to get you to give them more of your money, because you're likely to trade them all as one account, and that's why they get you. They're not scheming you or scamming you. You're just silly. They're giving you the ability to link all these accounts together to make it look like you're going to make more money, because they know you're going to lose most of the time on one account. And majority of you will tether them together like 20 accounts equal one big account, and you're going to lose them all at once and re-up. And everyone does that. And everyone pretty much does that wrong, because they follow some of their few favorite streamers who say they do that. And I'm going to promise you that's not repeatable for you. There's a better way to game the 20 account system, and I'm teaching y'all how to do it. So the idea of having 20 accounts ability is actually not to trade 20 accounts to amplify your profits by 20 and try to get base hits times 20 and make a living off of that. You might get a big payout every once in a while. Sure. You're not going to make a sustainable living, because what happens is once you blow those accounts up, you got to repeat the process, re-up those accounts, pay all that money, get the fund and start over. You have like weeks on, weeks off, weeks on, weeks off. So at best, you should use that multiple account thing to your advantage and actually use them as reserve accounts so that you never stop trading. The better thing to do, there's a couple of ways to do it, is when they're cheap, get as many as you can, as many as you think you need. Let's say that we think we need all 20 when they're cheap. Say they're normally 200 bucks. They have a sale that makes it like, you know, 15 bucks. Stock up. Buy every single one of them that you can. But don't use them all. Because they only repeat every month. And trust me, you're going to fail trading a lot. Assume you're going to want to buy them again next month. But whenever you have your downtime and there's not a sale, well, you don't want to go out there and pay 50 to 100 to 200 bucks just to get back in. And you will because you're desperate and want to trade, right? So make sure you get as many as you can at that recurring price, and then you keep paying that price every single month. And then if you want to put trade copier, the only reason to trade copy is, in reality, there's no reason to do that. The only reason you should add to a trade is if you're very confident in your trade. So why not add your position? The only way to get over that is to get over your position max by doubling the amount of times you're doing this, but there's no gain that you get. You could be wrong twice or right twice. So like to me, the whole trade copying concept is just to give you bigger numbers. And paper traders, as you can tell by people that are on YouTube, paper traders love big numbers, right? And people that follow people love to see big numbers. And paper traders love to show off those really big numbers. There's paper traders on YouTube claiming to make millions of dollars a day. The bigger the number, the more money you're going to pay for that. That's the reason they let you do that, by the way. That's the whole reason that you do it. It attracts more people. The reality of it is that your win rate and loss rate doesn't go up if you're trading them the same. So here's some tricks you can do. You have to read the buy rules of some of these things. Well, let's do an example. Let's say that we bought 20 and we only used 5 of them. The goal is to have a funded account that works and then have like a couple in reserve. So we have 5 accounts, A, B, C, D, E. And you're in a place like today where market's trading through here, and you know, maybe I can short from here, maybe I can short from here, maybe I can short from here. Instead of lining up all 5 accounts to take a stab there and losing all 5 accounts at once, trade account A on that trade, account B on that trade, and account C on that trade. You got to read the rules. If they don't disallow you to do this, you should do this. The account is to hedge and leverage the other account. Not like trade one up and trade one down. Like those, like, but as long as you're not cheating what their rules are. If their rules don't force you to tie them together, then if you have 3 possible options and one of them has the drawdown to get you, then actually split your accounts up and maybe one of them goes bust and the 2 of the other ones win. This is just a generic example. And again, you have to read the rules to make sure they allow you to trade your different accounts differently in the eval side. In the funded side, they may not let you do that. In the eval side, pretty much anything goes. On the funded side, a lot of times they'll have rules that prevent you from using one account differently than the other, because this technically is a mathematically correct way to approach this, is to use one account, then use another, then use another, and use another. And the first couple of them might fail, and then the latter end. Now, this is not my trading strategy. These are mathematical strategies just to tell you 20 account trade copier is a doomed concept. Let's pretend that martingales were a thing, right? And that they actually ultimately won. Well, you're only paying 15 bucks per roll of the dice. And it's an example. Now, again, don't trade like this, but this is just a mathematical example, again, to disprove this. Logically speaking, if I tie all 20 trades right here, the same spot, they either all win or all lose. There's no in between. However, if I have 20 trades and I short account 1 here and account 2 here and account 3 here and account 4 here and 5 and 6 all the way up to 20, technically speaking, it only cost me $300 or $400 for the 1 accounts that are finally right to actually win the challenge. So when you start thinking like that, you start realizing tethering my accounts together in the eval side is kind of a silly concept. If eval anything goes, use math to your advantage and pay 15 bucks to get a funded account, and then trade your funded account seriously and never tether them together. Does this make sense? Just as a principle of the matter? You guys follow what I'm saying? You have a 50-50 shot of all of them being right, or a cascading probability of like accounts 1 to 20. Probably 1 has a high probability of being wrong or a low probability of being right. But as you keep adding to account 2, 3, 4, 5, 6, 7, 20, this one has a very high probability of being right. So some subset of your later accounts are going to win and some of them will lose. And you'll walk away with, instead of it being 50-50 chance that you win all and lose all, it's a 50-50 chance this way where half of them won and half of them lost. It's the martingale philosophy, right? So essentially this philosophy is telling you that tethering your accounts together shifts the odds this way. If they're attached, this is a cool lesson, guys. Watch. Attached. And let's say there's a 50-50 shot you win. So in the attached case, half of the time you win all, half of the time you lose all. Not attached, and you just cascade them in, then you still win half and lose half, maybe. But at the same 50-50, the result is you have 20 fake vapor money accounts in one hand, or 0. In this account, you have pretty much some winning accounts in your hand. Because ultimately, markets don't just move in a straight line. Ultimately, they will retrace. So in the eval section, if everything goes, the easiest way to build 20 funded accounts is to not tether them together and just keep taking stabs. If you want to short here, okay, short here. Market goes up higher, short here. Account 2. Market goes higher, short here. Account 3. Market goes higher, short here, account 4. Just make sure you're trading in the same direction as F2 has said. Like I said, you have to read the rules. Now, this is a generic mathematical, statistical conversation. This is telling you mathematically what the appropriate way to go is. Always make sure you read the rules of what you can and can't do. That's definitely the advice as well. And in the funded account side, don't do any of these tricks if they don't let you, because usually with funded accounts, they have stricter rules. So it's better to walk away with some funded accounts. In reality, you only need one funded account to make a living off of, and you need like 3 or 4 in reserve at a low locked-in rate. The problem is that when they're in reserve, you're paying that huge monthly fee. So what you want to do is you want to know how many times you're likely to fail in a month, and the goal is to just never stop trading. If your funded account blows up, you already have another one ready to go the very next day. And if you blow up your funded account, don't trade that same day. Always take a day off and trade the next day. When there's a big sale, get yourself like $15 accounts and then pass 20 evals, and don't convert them to the funded account so you're ready to use them. And just keep them on standby. This trick will be the way you save the most amount of money doing this. I was hoping to demonstrate it. Because if you get 20 accounts at 15 bucks, what is that? You know, $300? $300 to guarantee at least 2 or 3 of those become funded, and 17 of those can blow up. Okay. But without the sale, normally it's $200 or $300 a month anyways. So the idea is to get yourself a couple funded accounts and then start trading with one of them. Maybe 2. You can't trade them in opposite directions, things like that. They usually have rules against doing that, but make sure when you get to the funded side, you follow the rules. That's why I actually wanted to pick one of these and do it, to show you how to play the rules against it. The house sets rules, so you're going to play it the right way. No dollar cost averaging on funding. Yeah. So the trick that I'm teaching is basically dollar cost averaging and eval. If anything goes, normally if you have account 1, right? Or account A, price falls to here and you long, price falls there, you long again, price falls there, you long again. That called that martingale thing. I heard that Apex only allows you to DCA one time, which is from here to here. You can only add to your position one time when it's losing. So don't ever go a third time. However, if it's allowed and you can get away with this, instead of dollar cost averaging in the same account, you buy at A here, you buy at B here, you buy at C here. And you're basically buying the dip and dollar cost averaging, just using a second account to do it. Now in the eval, a lot of them won't let you do that. And a lot of them get really clever, but these are tricks that if you can do it, do it. If they don't have anything that prevents you from doing it. Like I said, you're not playing against a regulated trading exchange here. You're playing against a prop trading firm who invented rules that make you lose. The goal of them is to make you lose, they make money. So your goal is to beat the carnival at its own game and walk away with the prize. As long you're not breaking any laws or anything by doing things different. There's no SEC regulation in this stuff. This is their house rules. So you have to make sure that you do their house rules. And a lot of them are shady and don't pay out on time. So a lot of times they try to find every excuse they can to not pay you out. But you have to be very clever and make sure you follow every rule they teach you. Yeah. No DC unfunded, you have to convert them. They give you a certain amount of time to pay for admin fee. Yeah, so if you have a certain amount of time to convert them, there's a lot of stuff to go with it. So I'm hoping I can get some set up so we can actually do it together. My downside target for shorting Q would be at the S&P breaks the bull zone here. So these are just mathematical discussions. Tethering 20 accounts together is a way for the streamers to make it look like it's big numbers so that you go buy the product. It's not how you should trade it, I promise. Plus, some of them are better at doing this. They've been doing it for a while. You'll be very frustrated to do so. So you, at minimum, only really need one account to trade. If you're going to tether all your accounts together, then you do what I call the base hit game, which is you tether them all together and you wait for a trade that you are very confident in, and then you just hit it quick. Hit it hard with all of them. Like you don't chase a green. You like wait, like here's an example, SPY today buying at bear zone bottom to trade up to here or something, or trading through the zone like that. That does make a lot of sense. Okay, let me hit it hard really quick. But it's not like let me chase the short, chase along. You're not trying to like catch waves in the market. You're waiting for like that perfect setup. So F2 is doing a cool idea. A copier connecting to different props versus just using one single prop. That's a good idea. Yeah, so when I'm saying copy, don't copy in one prop account. I think you can really achieve the maximum of what you do with no more than maybe 5 accounts. Like 3 evals passed. Like you buy 20. An example is here. Let me give you an idea. Let's say that you fail like 3 out of 4 times. You buy 20 at $15 a month. I'm just making up whatever it is at a sale. You pay $300 for the month. Of those 20, say that 5 of those pass. Remember, in the eval, you can just do whatever you want. So 5 of those pass, great. Now you have the 5 funded accounts. Take 3. Don't convert. Leave an eval, because your conversion, they make you pay another fee that's expensive, so leave it at that. 1 funded reserved. And then 1 funded active. You paid $300 to get 3 evals on the side in a month. 1 funded reserve in case you blow up your funded active. Trade this one very seriously. If this one blows up that month, then you have this one the next day. And then while you're doing that one the next day, pay for one of those to be funded. So you basically always have 1 in reserve and 1 that's active. And when there's not a sale, normally you'd pay just $300 for that 1 account or something like that. So the idea is that it gives you the ability to utilize the sale to maximize your odds to get a funded account. Don't think you need 20 to be successful. You just need 1. Oh, hell. Come on, NASDAQ. Don't hate me today. Res is still negative, so I'm betting on it. S&P Res is negative too. And if you're going to trade 2 or 3 or 4 or 5 accounts all at once, Do them with different firms and do them in different directions. If you feel like one's long and one's short, do those tricks there. Don't ever like do that in the same firm. To really maximize your, what they call the martingale odds, is to have different accounts at different places. Yeah. Math can work in your favor. It's all paper money. So like you don't normally do martingales with real money, but that's like a big part of prop trading strategy for the owner side, is to prevent people from doing this, because it's mathematically, statistically sound to do this. They lose a lot of money if they let people do it, which is why they have rules keeping people from doing it. But theoretically, if you had 5 accounts in one firm that are funded, you can't trade them against each other or DCA into by using account A, then account B to buy again, then account C to buy again. They typically will watch you if you do that and not pay out if you do. But if you have one account at 6 different firms and you did that, then you guarantee with mathematically that you have higher odds to get paid in general. So remember, you're trying to bet that you can utilize like math to help you with your strategy. Theoretically, the highest probable odds you have in a prop trading. And then again, we're not even talking about the skill of the trader. We're just looking at the math. The math of the trader is, if you're the world's worst trader and you're just coin flipping, then you do this. Do your 20 accounts with firm A, firm B, C, and D. Say that of them, you only get 5 of them funded. Okay, you have 5 funded here, 5 funded here, 5 funded here, 5 funded here. Now again, this is paper trading. The Wild West, there's no rules. You could basically long this account and short that account, as long as the drawdowns don't get you. Now, this is the dumb thing I'm about to say, but one of them wins and one of them loses, and you just kicked out of one firm. If they were all in firm A, they wouldn't let you do that, but firm C and D wouldn't know that you're doing that. Remember, this is paper trading, and the eval side, anything goes, right? So it's statistically better for you to use, if markets are falling, you just do some of the accounts in A, some of the accounts in B, some of the accounts in C, etc. And then maybe you blow up at that firm and you win at those 2 firms. The idea is to have one funded account everywhere. So say ultimately you get like one funded account in each firm, which is great. And then markets are falling and you do the same thing and you buy, and then one of them wins. And then you guarantee you get a payout somewhere. Oh, granted, they pay out. So theoretically, the trick is diversification is the better course of action, even in investing, just like it is in prop firms. If you buy 20 accounts from one firm, you try to trade them and tie them together, you're going to spend the most money and lose the most money. So all things being equal, not saying that you're a better trader or not a better trader, all things being equal, you should have multiple firms, multiple amounts of accounts. Now, the hardest part is actually trading them, because you have to log in the different instances of Tradebate. That's the harder part with that. If Sierra charts, you can connect them all at once, write your own copier. Oh, dude, that's nice. Are these prop firms signing up for the platform? Oh, hell. Come on, NASDAQ. Why you hate me today? Put my glasses on. We're at 20,000. I'm still betting on negative resilience. So theoretically, the goal is never try to buy 20, just tether them together. Even if you're in the same firm, buy 20, use them as reserves. You only need like 1, maybe 2 accounts to trade, but like really just 1. I mean, 1 account is enough to really hone your skills in trade. Or 2 accounts if you have like, okay, this is I'm going to take a lot of risk on this account. I'm going to slow grind this other one. So one of them utilizes like your real kind of like slower grinding trading strategy. Like I'm going to wait, and every time I get a trade that I like, I'm only going to get the ones that I like. I'm going to take risky trades at all. Like I'm going to take my solid bull zone balances, things like that. Okay. And And then the other account is like, okay, I'm going to scalp in this one. And use, if you're two different accounts on the same firm, you're going to use two different strategies for sure. The funny thing that I tell you guys is that they take a single account and give you 90% off, but then sell you 20 of them. It's like, that's the funny part. Here, give me $100 a month. I'll give you 90% off. Okay, that's only $10 a month. Okay, let me get 20 of those. Now you just bought $200 a month worth of shit for $100 a month price for fake money. They literally just, with the idea of let me give you a big sale and then sell you 20 of them, they actually got you to buy, they upsold you at 100%. Be $200. So think about this. It's all fake money. Oh, hell. Okay, I'm right at the spot where I don't like. So this is where I'm contemplating closing this out. I don't like this. It's Roblox Cash. Yeah, the trick is to just throw all the tricks in the book you got at the eval, because there's anything goes. YOLO, do whatever. Evals are cheap, replaceable. Just get as many as you can, but don't do the same techniques in eval as you do in funded. Once you get to funded, you're gonna have to do something slightly different. Markets got slightly better very quick. Nasdaq is still struggling on resilience, but dang. Nvidia started to move, and that's what caused it to move. Once Nvidia came off the hole, right here, started moving up. I'm going to trim this out. This is where I'm going to get out. So right here is where I'm going to start contemplating walking away from this. Apple's also moving. All right, I'm just going to call it. That's going to go too fast. That was Friday's gain. No bueno. Bonox and Blue Sky are the best. Trade structure is better. Yeah, this just chopped me out. I definitely would have rather been bullish at a lower spot, but I think ultimately I might be right, but this is not the best spot. We're actually right at the turning point on VIX too as well. So not the best trade today, but here, right here. This is where we contemplate. So I was betting on VIX staying higher, and it's just kind of going lower. Bull market's winning. Boo. Top set pays every 5 day of 200 or more profits per day. And let me go sign up for something. Let me go look really quick. There's some prices here. I remember somebody asked what I recommend shorting today. I said, not really. just yeah, this is fine because this is like right on the edge where I was contemplating not wanting to be in it. But yeah, this is probably where it needs to slow down. Okay. Well, that's 11 o'clock, so that's the end of the stream anyways. But you guys come back 2 o'clock. Maybe I can get everything all set up by then. I'm going to try and make some phone calls and get everything done. Love you guys. We'll see you all around. This was hard to read today, but irrational markets, things are just a little crazy. This one didn't play out, and I just stopped out when I just didn't want to lose anymore. So pretty much where I was expecting to be. All right, we love you. Come back 2 o'clock. See y'all later. Love y'all. Don't forget, subscribe to the channel if you haven't already. We're here every day. Not every day is a winning day, but that is trading. So we'll see y'all later at 2 o'clock. Don't forget to check out the extended trial of a rocket scooter. $35 a month. Check out all the indicators, learn all the techniques, study with us, teach you everything you know about finding market maker positions and risk. See you guys soon.